Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenevec from Bloomberg Radio.
Huawei Technologies has been in the news, as you know, for a few years now, caught in crosshairs, really the crosshairs, I should say, of the U.S.-China tech war, you might say. In a Bloomberg exclusive, Arcade O'Keefe reports on how the Chinese telecommunications company that is blacklisted by the United States is secretly funding cutting-edge research at American universities, including Harvard, among others, through an independent Washington-based foundation.
With more on the story that is among the most read on the Bloomberg terminal today, we welcome Bloomberg News national security reporter Kate O'Keefe in our Washington, D.C. bureau. Kate, an incredibly hard-hitting story where you found out some pretty jarring stuff. Tell us exactly what you found out in your reporting.
Thank you so much. Yes, the gist of it is that Huawei has for years now been spending millions of dollars to fund top researchers at top U.S. universities without their knowledge. And the way they did that is by routing the money through an independent foundation that's based here in Washington, D.C., called the Optica Foundation.
So tell us about the Optica Foundation. What are they? What do they do? And how long has Huawei been doing this? And who else is giving to the foundation?
Right. So Optica's been around a little over 20 years. It's a nonprofit, and they have an additional nonprofit arm called the Optica Foundation. Huawei joined Optica as a member in 2021, and that's when the terms of this competition were hashed out. Huawei agreed, and we've seen the contract between Huawei and Optica. They agreed to fund this competition where they give $100,000 to 10 researchers per year who compete with their ideas in all sorts of really interesting research arenas. Optica's focused on, optics and photonics research. That's the science of light, and there's all sorts of interesting applications from lasers to telecommunications, biomedical diagnostics. I mean, you're talking some really interesting stuff that's being funded right now.
Yeah, I want to learn more about that and what exactly is being funded. What would Huawei be able to do with the research that's being conducted by the Optica Foundation?
Well, one thing that's important to keep in mind is that, the competition is funding academic research that is meant to be published at the end of the day, right? So this isn't sort of like an IP issue or anything like that. This is research that eventually would see the light of day, but by funding it, research security folks that I spoke with said that, Huawei is getting an advanced look and also building important relationships in this field. One of the specialists I spoke with said, Huawei may want to establish relationships and sort of track these folks as they progress in their careers, sponsor them, and then potentially acquire IP from them later on.
What's interesting about this, as you say, they are blacklisted by the United States, right? And so I'm curious about the money that's coming in and where it's going. I guess it's a transparency issue in a big way. You checked in with a lot of the academic recipients of these donations from the foundation, Harvard, Texas A&M, University of Southern California, Vanderbilt, a few others. What did they say? Do they know that there was money at this foundation that was coming from Huawei?
Right. So, it was known that Huawei was among many, many donors to the foundation at large, but it was not disclosed that they were funding the specific competition, which is relevant because the academics who win prizes, the money is actually given to their universities to sort of disperse to them as they carry out the research. And a lot of these universities actually have stated policies that they don't want to work with Huawei anymore. Several years ago, the U.S. government made clear that these universities' funding could be at risk if they continue working with Huawei, which was labeled a major national security threat here. And so this is just, a sort of bizarre situation where these researchers were applying for funding. They thought they were just getting money through a Washington, D.C. based, U.S. entity. But in fact, the money that they're getting is actually coming from Huawei, but via this U.S. foundation.
Which speaks again to the transparency, I guess, that makes us all scratch our heads a little bit. A Harvard physics professor in your story that you write about is chairman of the Optica Foundation board. What did he tell you about Huawei or what he knew?
Right. Well, so Optica's CEO said that, because I asked, well, who knew about this, who approved this? And the Optica board, the Optica Foundation board, they all knew about it, according to this CEO. So then, of course, that raised the question of, well, okay, the foundation's board chair is, a professor at Harvard, which is one of the universities, who has said, we don't want to work with Huawei anymore. We don't want our researchers taking this money. He eventually got back to me and said that, Optica and the foundation are growing entities, and moving forward, they want to make sure that there's more transparency in the way that their funding programs work.
Kate, is there anything happening here that goes against U.S. regulations, that goes against U.S. rules? Are in some way the universities violating any rules here?
So this is one of the most interesting things. I find this so often in U.S.-China stories. As far as I can tell, and the people that I've interviewed can tell, no laws have been broken here, right? I mean, and this is despite the fact that Huawei is on so many different government lists, Pentagon lists, all sorts of lists. Probably the most important regulation on Huawei today is administered by the Commerce Department, which prevents people and companies from sharing technology with Huawei. But as I mentioned before, since this is academic research, it's not actually covered by the Commerce Department regulations. One of the lawyers I spoke with said, this would be illegal if Huawei were subject to Treasury sanctions, which are stricter. But right now, there's no actual legal violation as far as anyone's aware. I mean, there's this strange situation where there may be university policy violations, but it's kind of been without the knowledge of the universities or the researchers. So I think this is just one of those gray area situations, and that's part of what made it so interesting to report.
Did anyone you spoke to, any critics, say, well, it may not violate the law as the law is written, but it violates the spirit of the law?
Yeah, that was the main gist of it. I mean, you had Optica and Huawei saying that this was not illegal and, it's totally fine. But in terms of all the critics, their focus was on the transparency aspect, yes.
All right, going to leave it there. Hey, listen, we so appreciate it. Kate O'Keefe, national security reporter at Bloomberg News, joining us from our D.C. bureau. As we said, this is one of the most read stories on the Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, everybody, we're going to stay in the tech world, a company that's been in the news lately, in fact, just reported earnings. We're talking about the more than $9 billion market cap enterprise cloud data management company, Informatica. The company reported earnings after the close yesterday. First quarter adjusted EPS beat the average analyst estimate. First quarter revenue was up more than 6%, 6.3% year over year, and in line. Company also reiterated its annual forecast for total revenues. The stock, by the way, down a little bit, down about 1%, but up about 7% year to date. AI featuring prominently and up top in the company's press release. So let's get to the interview. With us is the CEO of Informatica, Amit Walia, joining us from Redwood City, California. With us, too, is our own Romaine Bostic of Bloomberg Television here in studio. Amit, so good to be talking with you again. We're going to talk earnings. We're going to talk about a lot of stuff, but we've got to talk about the elephant in the room. Reports of a Salesforce acquisition, takeover talks. I know you and the company have said no comment, but we got to ask, is there nothing to this at all? You've had no conversations, nothing at all in terms of Salesforce or maybe even another company?
Well, thanks for hosting me today. Pleasure to be here. Well, look, we don't comment on rumors. Like we said in our press release, we've stated everything. We just are squarely executing and firing on all cylinders, and the Q1 results are there to be shown.
Okay, so with that said, what would you say to investors who may say, you know what, we think Informatica would work better as part of a bigger company? What would you say to them in response to that?
Well, look, we are a very unique company. We are the Switzerland of data. For large enterprises, we are the only platform that basically helps them manage the data from any source, any target, any type, to help them govern, manage quality data. It's a very unique place, and we work with all of these hyperscalers: Azure, AWS, GCP, Salesforce, OCI, Databricks, Snowflake. So it's a very unique spot we have in the enterprise world.
But why do you think, though, Salesforce would have been even interested in you? I mean, you're competing directly, of course, with one of their previous acquisitions in MuleSoft. You're competing with Fivetran. You're competing with a lot of other companies that are basically under these broader umbrellas here. Do you think you could remain competitive with those companies, with those divisions, as a standalone company yourself?
Well, look, I can't comment on what they would think, but the way I would characterize is that we've exceeded every metric top to bottom line in our Q1 guide. And if you think about our business, we've held the guide for the year. We actually had a very robust guide for Q2. And if you step back and look at a 35% growth rate of our cloud ARR, it's the fastest growing infrastructure business of that scale. And if you look at the scale of our platform, 92 trillion transactions a month, growing 69% year over year. That's a pretty significant scale business solving mission critical enterprise data management needs.
Talk about the size of some of those clients, some of those new customers. We heard on the call, we heard in the report that you're getting larger clients with much larger sort of sales figures to be able to buy whatever they need to buy here. Is this the plan now to scale up the ladder?
Well, look, we've served G2K customers. And a great example of that is like our average subscription ARR grew 28% to 310,000 per subscription customer. And examples are the customers are highlighted in our earnings call, like a Sodexo or like a Bridgestone, or many other customers who are basically standardizing on our platform to solve mission critical needs of, data quality for the Gen AI world, data governance, master data management, managing a digital supply chain. And that's where the scale and scope of what we do becomes extremely mission critical. And those are the kind of customers we are heavily invested in directly ourselves with our partners that I talked about, including the GSI partners like an Accenture or a Deloitte. So that's our strategy, and it's going very well.
Hey, one of the things, just talking with our Bloomberg Intelligence team and looking at your results, it is, about your targets. Why aren't you bringing all of them forward despite the 35% growth in the cloud business? Can you talk to us a little bit about that?
Look, we are a very consistent execution company. Q1, as you saw, we beat our numbers handsomely, the guide that we gave. And look, it's the smallest quarter. We are pretty thoughtful. And I think when we think of the year, we feel very good about it, given digital transformation, modernization, and Gen AI. And I think we want to land to the middle of the year and see how the business goes. But it's pretty early innings in the start of a year for us to think like that. But we feel pretty good about our setup for the year.
So are you being a little bit conservative then in the forecast? Would you use that word?
Consistent execution is the word I like to use. So we're getting up for our user conference.
No, that's not what I asked. So not conservative at all? You sound a little bit, I don't want to even use the word cautious, but yeah, go ahead, your words.
I mean, look, we were always cautious and optimistic at the same time. And I think thoughtful is the right word. Look, the way I look at it is that right now we're gearing up for a user conference. It's actually turning out to be the biggest user conference ever, with basically attendance and pipeline ahead of its curve. And as I said, Q1 is the start of the year. We'll look to landing in the middle of the year and looking at the year at that vantage point than getting too ahead of our skis beginning of the year.
Hey, Amit, you heard Romain mention some of the companies that you compete with when it comes to the database management space. He mentioned MuleSoft, others like SAP, IBM, Oracle. Given that it is getting increasingly crowded, I'm wondering what's next for you before data integration, master data management, and governance layers. Would you move into data resilience?
Well, look, we have a very big untapped market. Ours is a very fragmented market, a $62 billion cloud TAM. We're the largest provider, closing into $2 billion in revenue soon. And I think we believe that there's so much under-penetration within large enterprises of the various offerings we have. We have 7 product categories, lead in every market. So I think they're squarely focused on driving that growth. Lots to be had in that. And look, as Gen AI is getting there, so much of data preparation has to happen for that to be happening. So before we look at a new market, plenty of room to grow within our existing TAM.
So where is the growth, though? Is that going to come primarily here in the US and North America? Is there a much more of a global strategy afoot?
Oh, we are a global company. So we're about 60% in North America, or America is about 30% in EMEA, and the rest in APJ. So we're a very well balanced out company across the globe, across all verticals. So of course, international, we feel like can grow even more. But within the US, we still believe that large enterprises are still under-penetrated in what they will do in terms of data management. So that's where our go-to-market efforts are focused.
Well, Amit, one reason why I asked that, though, too, is I'm sure you're aware of all of the regulatory issues, or maybe let's just call them political issues right now, because it hasn't quite translated into regulation. But a lot of concerns among individual companies about protecting their data, whether it's government data or the data from the companies that are homegrown here. How do you sort of thread that needle? I mean, this is not the sort of old school cross-border type of business that we're used to. We're entering a much different era where a lot of things have to be walled off in order to protect that data and protect national security.
You're very correct, actually. And I think the areas of data governance, data privacy, data access is a particular product area that's actually growing significantly well for us. And we see that area, large enterprises are worried about that. They want to make sure that the right people have the right access to the right data, it's privacy managed, and we see that business growing handsomely for us. And in fact, that's one of the first things when we see enterprises figuring out their Gen AI strategy, solving for that first. And we see that business growing very well.
Well, and to kind of piggyback on that, a lot of folks are sometimes, the conversation we've been having here, our Bloomberg Intelligence team did a whole big event on it about Gen AI, but also the thinking of, rather than putting things up in the cloud, because one of the concerns is security and privacy of the data that's up there, increasingly getting a lot more sensitive, that everybody's going to be moving to on-premise in terms of, keeping all of their data management on site near kind of their headquarters or where their operations are. So having said that, do you believe that you can get a lot of your customers to basically shift from on-premise to cloud? And what are you seeing? Or I should say that there are a lot of clients who want to keep it close to home, but your business, a lot, right? It's all dependent on moving up into the cloud. Can you get those customers to shift?
So this is where we're very unique. So you're right. It's cloud first. But of course, customers live in a hybrid environment. And while we have our product in the cloud, the way we've implemented and architected is that it can actually be behind the firewalls of our customer and outside the firewall of the customer as well, through that single pane of glass in the cloud. Customers love that. So they can manage this hybrid environment until they feel whichever workload goes to the cloud, whichever goes slowly or never goes. We are doing that for large customers like banks, like healthcare companies, like insurance companies. So I believe that will be the state for many years to come, and we can manage that because we are doing that today.
All right, just checking. You sure you're not talking with Salesforce? Just want to check.
Look, I think getting ready for Informatica World, we have a lot of great stuff to share over there, and I'm squarely focused on out-delivering Q2, given what we've shared with our investors.
Well,
nice try, Carol.
I know, I tried. We've been at Informatica World. That's a good thing. Maybe you'll make an announcement there. All right, anyway, we really so appreciate your time. Amit, thank you so much. Amit Walia, Chief Executive Officer of Informatica out there in Redwood City. And of course, our thanks to our colleague, Romaine Bostic. Really a fun conversation.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Hey, where to go, Ohio?
Well, Qualcomm shares soaring today. This after the world's biggest seller of smartphone processors gave an upbeat forecast, suggesting that demand for handsets increasing after a 2-year slump. Carol, chips certainly on our minds today, but also I'd say every day, given that they're just essential to almost every manufactured good. That said, one chip company with its own set of troubles is Intel. They once defined Silicon Valley, and it spent a decade flailing, now being overshadowed by other companies.
Yes, Bloomberg Businessweek columnist Max Chafkin and Bloomberg News U.S. semiconductor and networking reporter Ian King writing about Intel staking its future on Ohio. It is today's Bloomberg Big Take. Also among the most read stories, as Tim said, on the Bloomberg terminal. Max joining us here in our Bloomberg Interactive Broker studio here in New York City, and Ian joining us in our San Francisco bureau. Guys, welcome. I feel like we all need this story because we talk about Intel a lot. We talk about semiconductors a lot. There's at least a problem from an American perspective when it comes to semiconductors. Most of the best ones, Max, are actually made in Taiwan.
Yeah, and of course, this is an industry that the U.S. basically created. Silicon Valley is called Silicon Valley because of Intel and the ecosystem that it spawned of making these high-end chips. Unfortunately, as Ian has been writing and covering for the last few years, Intel has really fallen on some hard times. No longer able to make these leading edge semiconductors. And with that, that creates geopolitical problems, for the United States, as well as, of course, business problems for, a company that's still very important, still a major player in the chips industry.
Hey, Ian, before we cut to current day, I found one of the most fascinating parts of the piece was the history of Intel in Silicon Valley and the folks behind Intel, the folks behind Moore's Law as well. Give us a little bit of a history lesson for those who are not as deeply steeped in chips as you are.
Yeah, Gordon Moore, Robert Noyce came out at the birth of the chip industry, which kind of really started with East Coast companies like Fairchild, and they really brought this industry to this coast, and now it's become, as Max just pointed out, synonymous with Silicon Valley. They saw an opportunity and really brought sort of engineering and manufacturing prowess to what was in the 60s really kind of a science project, an experiment. And they really created this modern industry that sort of spans the globe now, and that, as we learned during the lockdown, was so important to the world economy. And this company, this icon, just lost its way basically about 2015, made some really poor decisions that put us in the position we're in now.
It's not the first time we've heard this story where a leader is also, comes undone. But Ian, what happened in 2015 that really set Intel on a course for its undoing in some way, or opening the door for challengers to really kind of become more of leaders in the industry?
Well, Max and I were lucky enough to actually get to walk up and look at the physical manifestation of this. And it was really a technology sort of fork in the road with a technology called EUV, made by a company called ASML. Key part of this process of making these semiconductors. And Intel, had a choice whether to adopt this technology with all of the problems that it had at the time and work them out, or whether to basically, ignore, sort of put it on hold and persist with existing technology, put it on hold, and that turned out to be a blind alley technologically. Its opponents, its rivals, TSMC, Samsung said, no, we actually fancy having a go at this. We think we can make it work. And they did, and they took the lead away from Intel.
Which brings us to today, Max, and where we are when it comes to not just Intel's problems, but also what the US government is now trying to do in order to, alleviate the situation, at least for the United States. Give us an update on where the money's coming from and where it's going right now.
Yeah, so Intel, as of 2021, has a new CEO, Pat Gelsinger, who essentially his pitch was like, bring back the old Intel. People know Intel for manufacturing.
He was there for years. He
yes,
started
exactly.
As
Sorry,
a teenager.
I should mention that. This is a guy who's been at Intel, except for a brief interlude at EMC. He's been at Intel since like 1979. He mentored under Andy Grove, the legendary CEO, and it was sort of like, get back to manufacturing. This was a defining feature of what made the company successful, which it's helpful in two ways. One is that, in a lot of ways, like, chips are a volume business. If your volume starts to go down because your manufacturing isn't so great, that's going to have lots of knock-on effects, right? And it's also helpful because of politics, because Gelsinger was reading the political moment in a very savvy way, and you had Joe Biden get elected, with the promise of restoring industrial capacity. You had, as Ian said, the lockdowns and the chip shortage, sudden realization, and you had China and the fact that TSMC, which is based in Taiwan, is very close geographically to China, to mainland China, and the prospect that Beijing could decide to invade, and that would put the chips that we rely on at risk. So you have this kind of swirl of strategic reasons, political reasons, and Intel now is betting big. I mean, you mentioned Ohio. They're also doing major projects in Arizona and also in Oregon, where both those places they've had significant operations before, and you're talking about tens of billions of dollars, and then the Biden administration coming in with their own money, $19.5 billion from the CHIPS Act on top of some state funds. So it's a lot of money on this thing. We need to say, like, this is risky. There's no guarantee this is going to work. TSMC right now has a pretty substantial lead.
And they're also building plants here in the United States, Max.
Yeah, they're building plants, again, with support from the Biden administration. Again, this is a big strategy, although when you look at the size, the Biden White House has given more money to Intel than any of these other companies. And what Intel is trying to do here is very ambitious. This Ohio site is enormous. I mean, I went there at the end of last year, and it looks like a kind of like a muddy field. It doesn't look like all that much, but it basically goes on as far as the eye can see, and already you've got 1,400 people working there, construction workers. I mean, there's a lot of action there. If it were built out, I mean, this would be like $100 billion site. It would be, as Gelsinger likes to brag, it would be the biggest chip factory in the world.
All right, so Ian, right now a massive muddy field, but it's not going to be that way. There's a lot of money going into it. It takes a couple of years to get this up and running. So I wonder, first of all, the time that it's going to take for Intel to get this done, and ultimately, what guarantee does it have that this is the right bet, that this is the right strategy? Where will the marketplace essentially be maybe in a few years?
Yeah, I mean, if I knew that, I'd be in a different position. But no,
fair.
But instead, you're stuck with us.
Yeah.
But those are the questions, right?
Yeah. No, that is absolutely the tension that exists right now. Just because he's building these plants doesn't mean the others will come. Right? That's very important. Intel, on its own, Intel at its current level is building way more capacity than it needs. The bet, and it's very clearly a bet, as Max pointed to, is we're going to build all these plants, and then we're going to persuade these companies that hated us, that suffered at the consequences of our strengths for years, to give us orders, and we're going to build their chips as well, because that's the way we're going to play this. That's the way the world is going. This outsourcing model is only going to get stronger, and the only way we're going to win in this is to be part of it. And so far, they don't have any customers. The only customer is themselves, and that's not enough to basically fill all of these plants are going to get built. That's the big bet.
We'll talk about tension from customer, right? Like,
yeah,
that's...
Well, that is the challenge. I mean, the assets that they have, and one of them is this, this machine that Ian mentioned, which Gelsinger managed to negotiate early access to. So we actually saw when we were in Oregon, the one of two of these machines that exist in the world. The other one, is at the ASML, headquarters. So it's really the only one that was fully assembled. They have early access to that. Maybe that'll allow them to help jump ahead. The other thing that's probably more important, because all the other companies are also going to get this awesome looking machine, is political. They have an advantage in that they are kind of an American national champion, and we've even seen the Biden administration talk that way, about the fact that we as a country need to support this, because if Intel were to fail or to get broken up or to exit, leading edge manufacturing as AMD, their main competitor, did, that would be a problem for the U.S. So there is the prospect of further political support from what they already have. So
national security concerns, this plays into big time.
Exactly, national security and Gina Raimondo, the Commerce Secretary, just some weeks ago, sort of floated this possibility of a second CHIPS Act, right? Kind of, now who knows if there's the political will for that, but it does seem like Intel has this advantage that some of these other companies don't, and though it remains to be seen whether they can capitalize on it.
Ian, as Max mentioned, the both of you got to go to many different places, actually, for the reporting of this story. California, Oregon, Ohio, Arizona, among other places.
Some great pictures, by the way, online. Highly recommend everyone check it out.
Yeah, very multimedia-focused story, so do check it out on the terminal or at Bloomberg.com. Talk about what you saw, Ian, at D1X, the company's research and development fab just outside of Portland, and describe the scene for us, because all of that was so new to me.
Well, and this is why, it was great to go with Max, because he was kind of looking around and watching the robots going by on the ceilings and things like that. I've been in these plants before. I'm lucky enough to have been there. The one in D1X, to be honest with you, is a bit like Times Square. There were way too many people there because there's a lot of work going on. A lot of experimentation, a lot of research and design. If you go to a typical production fab, there's nobody there, and there's nobody there for a reason, because everything's running smoothly and everything's done by robots. If you see 2 or 3 people in a production line, that's about how it should be. So, there's just, it's very difficult to convey to people what is going on in all of these machines, because it's all going on in these machines, and that's a good sign. If there are people there, it's a bad sign. So you think of an auto factory and robots and things like that, there's no comparison in the level of complexity of manufacturing that is going on in these chip plants, and the numbers alone reflect that. $19.5 billion sounds like a huge amount of our taxpayers' money going towards one company, but it compared to the amount of capex that they have to deploy in a year, it really isn't very much at all.
You know, and when you go into these places, I mean, just the procedure of getting in is complicated and creates a sense that, you know, you're entering the holy of holies.
I mean, you're doing something like, you're not scrubbing in for surgery. It's even cleaner than that.
It's much cleaner than surgery. And, you know, you have to put on special gloves and then a Gore-Tex suit and a hood and a mask and then gloves over your gloves. And, you know, it's funny because you're going through this entire process because the air in this clean room, it's called a clean room, the main factory floor, has to be, you know, way 1,000 times cleaner than a hospital operating room. But that air doesn't actually touch the chips. Like, I mean, even there, you're a long way because the chips are protected inside of an even cleaner environment inside of these robotic things. And like, even to see the features that are being cut on these chips, you know, you obviously can't see them with a naked eye. They're even on the newer chips, they're not even, the features don't even refract light. So it doesn't, you wouldn't see any evidence of them. You'd have to use basically an electron microscope. So again, like Ian's saying, it's just a level of manufacturing complexity that is extremely sophisticated and novel. You know, Gelsinger said, you know, each wafer, the chips come from these big silicon discs that are called wafers. Each wafer is an experiment. And you do really get that sense. You know, all of these companies are making these extremely high stakes bets every couple of years. And if it goes wrong, as Ian mentioned, you know, then you can turn this, you know, great American industrial giant into something that is really gasping just in a few years.
This line I love: the obscene cost, complexity, and time involved in this microscopic ballet makes sense only if you can do it at high volume, which means having tens of thousands of wafers in production at any given time. I mean, it's a big bet. Ian, big bet by Intel. If this doesn't work, then what for Intel?
I mean, the economics are brutal. Right? As we were just indicating, and we saw very recently, Intel has put the numbers out there for its manufacturing operations. It's been brave and said, look, this is where we are, this is how much better we need to get. The difference between making money and losing billions of dollars is very, very small, and it's all about yield. It's how many of these tiny things can you make, and how many per production run can you get out of this amount, set fixed amount of money that you're getting in there. The yield, everything, it's just so difficult. And if at the end of it, you're not first to market, you're second or third to market, you're late, something like that, maybe these things that can sell for tens of thousands of dollars each, suddenly you're selling them for less than it costs to make. So it's hard to convey just how quickly this industry can change and how brutal it is.
Max, 5 seconds. Is there a picture of you guys all in the white gowns and everything?
You can't even recognize us. I mean, you know, there's a picture maybe of Ian, but we're not even sure.
You're just like this. Like looking up at
Who are these people? Unbelievable reporting. The story that we all need to know to understand Intel. Bloomberg Businessweek columnist Max Chafkin and Bloomberg News U.S. semiconductor and networking reporter Ian King.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, United Health CEO yesterday told lawmakers that his company is still trying to determine why its computer system were left vulnerable to hackers who perpetrated a devastating cyber attack. Carol, reminder, the intruders into United Health's system, the huge medical insurer, they got access to a hoard of health and personal data. The company's CEO said the trove might cover a third of Americans.
That's a lot. That scares me. That's just one, albeit very prominent headline in the world of cybersecurity from recent days. No doubt will be among the topics discussed at next week's RSA conference, the major cybersecurity event that takes place annually in San Francisco. I've been there. It's kind of an interesting place.
Did you feel safe? Did you feel like your data was safe there?
I think I kind of felt. I don't. Do we ever really feel completely safe? Let's see what Wendy Thomas has to say. She's President and Chief Executive Officer of the publicly traded small cap Secureworks. She's joining us from Atlanta. Wendy, nice to be talking with you again. Kind of set the scene for RSA. I mean, I feel like in the ground, we've talked about different things that were top of mind when it comes to cybersecurity. What is top of mind? Because it does feel like some of these hacks and these invasions, if you will, into data and our privacy are becoming bigger. And I almost feel like maybe closer to home, but I don't know. Do you tell me?
Absolutely. We see it in the headlines. And we certainly heard from D&I Haynes this morning on ransomware attacks up 74% last year. The interesting thing around the submissions at RSA, the security experts who are looking at this every day, three things appear to be the main themes of the conference: artificial intelligence, information manipulation, so think about deep fakes and some other things there, and career burnout from the security analysts who are really never out of the front lines of this fight. So all three of those are pretty important to all of us.
The one that surprises me the most to hear from you is career burnout. And I'm wondering what the implications are for your industry. I mean, is there a talent war happening right now? And is there a concern that with burnout, you won't have the folks who are necessary in order to be on the front lines when it comes to this? I don't want to call it a war, but it kind of feels like it is.
It certainly feels like it. At least emergency responders is a good parallel here. And there's been a gap in security talent in this industry really from the beginning. It does seem to be exacerbating in terms of the pace of attacks going on. The important part there is the ability to leverage emerging technologies, including AI, in order to start to scale scarce talent. And what we need to think about as a community of business leaders and government officials is how we both grow the talent pool and scale the talent pool with investments in technology.
How do you do that?
You do that by doing things like Secureworks does, partnering with universities to build that talent, building career paths and talent inside of companies. But it's also important for organizations to understand that the security experts aren't the only ones responsible for security. I mean, CEOs absolutely have to take the front line in setting the tone that we're all in this together, and any company's security is only as strong as its weakest link. So cyber awareness and training for the entire employee population is just as important for supporting those analysts as developing those analysts themselves.
Wendy, I think about the conversations we've all had together and with you specifically, and it's how the narrative has changed in the tech world in a big way in terms of artificial intelligence and Gen AI, right? And increasingly, it's just creeping into every conversation that we have in almost every story. Having said that, one of the things our Bloomberg Intelligence team recently did was this whole idea of like kind of where your data is going to be in a Gen AI world and where you want it to be. And, the cloud folks say, hey, it's safe up in the cloud and so on and so forth. And then those who do all the big enterprise systems say, no, it's better to have it on premise. And I'm just curious that what are you guys thinking about that, or what are your clients saying about, like, help me understand, where is my information going to be secure, safe, and all that good stuff?
Absolutely. So the top concern around the sort of LLM models of generative AI is that your data can be leaked, your user data, your company data can be leaked, or frankly, just put up into one of those tools unknowingly by an employee, and then that information is available more widely. It's a combination of both the security of your data, which isn't just about being on-prem or in the cloud. That's not really. It's about the configuration of the security around that, and it's about the way that you're using that data is a challenge in terms of trust. When you're talking about probabilistic models, even with your own data, to the extent that those models are giving you a different answer every time, it can be dangerous to use the answer in a kind of consistent or accurate way that you can trust.
Hey, I want to shift gears a little bit and talk about the landscape out there and just what you're seeing from customers, because we got some news earlier today that Amazon is going big when it comes to CrowdStrike and actually replacing other defensive tools with CrowdStrike's safeguards, this is from Amazon Web Services, dropping other security products in favor of CrowdStrike's cyber threat protection and response offering. This is according to an announcement from the two companies today. CrowdStrike, I think fair to say, a competitor to you. How do you watch news like this?
So we actually view CrowdStrike as co-opetition. So our technology works across more than just endpoint, which is what CrowdStrike is. We work across the entire network landscape, to cloud, to on-prem, to endpoint, to data workloads and SaaS applications. And so it's really important for our customers to be able to say yes to whatever point technologies that they choose to use. But what we see is that the adversary wins when they bypass or weave in between those products because they have compromised credentials, right? They have stolen the ability to log in about a third of the time. And so our ability to detect and protect against that beyond great antivirus type of tools like CrowdStrike is a fundamental partnership for us. Now, we do see customers like Amazon looking to reduce the number of vendors that they work with to consolidate, both in terms of spend as well as just management of multiple vendors. And so our platform's ability to scale organizations to work from one interface across whatever underlying cloud or security technologies they have in place is a pretty powerful way for them to scale that management.
Wendy, how do you look at the industry? Like, I feel like so far, yes, there's been issues, no doubt about it, right? And you've had ransomware and institutions or companies held hostage until things were dealt with. I guess, I always think about it from my take is like my fear of, my bank account, my investments, like that kind of thing being tapped. How do you guys think about, okay, wait, the system for the most part, things have been working fairly well? Or are you always kind of on pins and needles saying, someday there's just going to be something that really kind of shuts down our world as we know it. It's just a matter of time. And I hate to be I'm not trying to be, gloom and doom and stuff. I'm trying to be real because bad things do happen.
Well, there are a couple of thoughts there. One, you see CISA with the recent Critical Infrastructure Act looking to get proactive in protecting those things that as you're talking about, could potentially be very disruptive for all of us. Emergency services, healthcare, food. They're so vital that incapacitation there would be debilitating. So what I see is that the U.S. government in particular has been incredibly proactive in recent years in protecting from that type of event that you're speaking of. The other good news is what we see in sort of business day to day is that the vast majority of breaches that are occurring today can still be remediated by basic security hygiene. And I know it's not that fun, and we've talked before about buying a treadmill doesn't mean you lose weight, but doing the basics in security either as a citizen using passwords and multi-factor authentication, as well as what companies are doing if they have that hygiene in place, really very much can be prevented and or the damage mitigated.
Wendy Thomas, always good to check in with you. Thanks for taking the time ahead of next week's RSA conference. That's Wendy Thomas, the president and CEO over at the publicly traded company Secureworks, joining us from Atlanta.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody.
TikTok, right?
TikTok, everybody. It's about 18 minutes left in today's trading session. Just coming off our best levels of the session. Charlie, of course, just breaking down the numbers, but it's really some of those big tech names that are really fueling the momentum. NASDAQ 100 still up about 1.2%. So the leading equity index, if you will, on a percentage basis at this hour, ahead of Apple earnings. It's a big one.
Well, we got a great guest on this because he can not just talk about the broad markets, but also some names out there that are on his radar, because he says the next great investment opportunity when it comes to AI, Carol, is in the companies that are expanding the electrical grid. Okay. So not just the NVIDIAs, not just the super microcomputers. This is like the next wave of AI.
Which makes sense. All right, so let's get to it. Louis Navellier is with us, chairman, founder, and CIO at Navellier Associates, joining us once again from Florida. How are you?
I'm good.
Well, it's good to have you here. I guess let's just start big, broad macro before we get into kind of some of your thinking about AI, which seems to creep into every conversation we have, including several today. But having said that, Fed, macro, eco, anything of note that you think investors need to be paying attention to?
Well, your best investments are still hardware related. Obviously, that's NVIDIA and Supermicro. Both are running 200% sales growth. I know Supermicro went down, but after its announcement, but they did guide higher above analyst estimates, so it'll be fine. Microsoft did a much better job coaching how OpenAI is now contributing to their bottom line, so that there's some hope there. But Meta basically sent out the message that they got to spend more on hardware before they can boost their AI efforts. So really, the plays are hardware and just building the power grid, and that's the real problem. Is if you read the new EPA rules, they basically don't want traditional power plants anymore. So it's going to be very hard to.
What do you mean by that?
Yeah.
Well, it's all over the Wall Street Journal today, but basically, if you do a gas plant, you got to do carbon capture, and that takes forever to get approved. So by the time you get the carbon capture approved, it'll be too late. And they do want the gas plants to run at only 25% capacity because they want to encourage, solar, wind, etc. But the real problem we have in America is we don't have any transmission lines. If you transmit electricity a long ways, you're going to lose it in the air. That's that crackle you hear. But there are direct current grids. New York has one from Canada for hydro. California has one from the Pacific Northwest from hydro. But we're going to have to put in all these direct current grids to send green energy everywhere, and that's just not happening. But we do also have to build more power now because of all the cloud computing going on. I was in Reno where I have offices, and every mile up in the hills where I live, we have diesel generators because the grid can't handle the air conditioning load. And our power bills have tripled out there because they're pretty green out there. They're putting solar throughout the desert, and but it's the bills have tripled. And I think the cloud computing centers will stay there for a while because they open up at night and then they cool off because it's desert and the deserts get cold. But if electric rates go up the way they are, the grid's going to move. It's going to go to wherever the electricity is cheap, and that's either hydroelectric, nuclear, or someplace like Salt Lake City, which is all coal-fired. That's where all the government server farms are, ironically. And it's just a mess, and there's no coordination. And so we do like the construction companies because immediately they got to build more power. And so that's like Quanta Services, MCOR, stocks like that. And so they'll benefit as we just add more generating capacity. But yeah, yeah.
Louis, I was going to say it's probably a good segue to talk about energy stocks because you argue that that's crucial to hold right now, not even though referencing everything you just talked about. You're talking about geopolitics, escalation in the Middle East or Ukraine.
Well, the big issue is there going to be an incident? So right now we have Iran and UAE boosting production. Iran's at a record level right now. But if Ukraine decides to blow up the pipeline from the Arctic for Russia, that would be a disaster, and that would probably wipe out that production for 3 years. Those pipelines will freeze in the winter. So, obviously there was a natural gas pipeline blown up. Obviously they've attacked 5 refineries in the last couple of months. Biden administration told them to knock it off after 3. They've done 2, including one after they got the aid. They blew up the Trans-Siberian pipeline in 2 places to screw up Russia's trade with China. So, they've sunk a third of their naval fleet with their drones. I mean, it's they're very innovative, and I just worry about that kind of disruption. Shell basically proved that LNG is the place to be. I've got an LNG stock, Dorian, based in Bermuda with LNG ships. But again, the Biden administration put the kibosh on LNG until after the election to suspend all new expansion until environmental reviews. So it's confusing.
So are you buying the major integrated oil companies or no?
Yes.
You are.
I like Conoco. I know they missed by a penny. I like Exxon. I know they missed, but they have Guyana and they're getting bigger. They're going to buy Chevron stake in Guyana.
And the FTC, it looks like Exxon will be able to conclude the takeover with Pioneer. So you think that's a good thing for them? You like that?
Yes.
Yeah.
Yes. And then I have refiners like PSX, MPC, that's Marathon. So I have selected refiners. They always make money when we go from winter to summer fuels and vice versa. But we are the Saudi Arabia of natural gas, and we really should use it. The sad thing is, and I'm from Berkeley, California, so I'm trained in everything green. The sad thing is, if you don't use the gas, they're just going to flare it. So what are they doing? I mean, it doesn't make sense to me. Let's at least let it spin a turbine, generate some electricity.
I just want to mention, because you said you liked Eaton Corporation, it's up about 30% this year. You mentioned MCore, it's up about 60, almost 65%. And Qantas Services is up about 18%. So even with these moves up, you would put more new money into it and just got about 15 seconds.
Yeah, they rank well. The analysts are still upgrading their estimates, and of course they beat.
All right, good stuff. I feel like it's a laundry list of companies that maybe we need to reach out to and talk a little bit about it. But I agree with you. Like we were just talking this week with Ruchir Puri, the chief scientist at IBM Research, about accelerator chips and the importance of, with Gen AI, the amount of power, and we've got to make chips that more productive because of the power demands.
You were out on Monday, but Will Wade stopped by, covers nuclear energy, talking about the nuclear reactors that have been shut down around the country, some of them now looking to get opened again.
It's amazing. Hey, Louis, thank you so much. We always learn a lot and think about things a little bit differently. Louis Navellier, chairman, founder, CIO at Navellier Associates, joining us once again from Florida.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.